Hey, good afternoon, everybody. It's Mike with smartoptiontrading.com. It is Friday, TGIF for sure. The 30th of September, the last day of the month, the last day of the quarter, and this is our weekly recap. It goes out for free for everybody on social media and on my email list. Guys, if you'd like to join me, link in the description below. Come over to smartoptiontrading.com, click on live trading alerts. It's $25 for the first 30 days, $100 thereafter. Feel free to join us for live commentary, real trades, analysis, option flow, obviously, of course. And, this week was an interesting week. It's been tough. We traded the SPX options a lot in here, traded some futures, and overall, we found a way to get through this week and make some money. What's going on here this week, and we have quite a little bit to talk about here, is we have a market that is in major, major distress. I'm not even going to talk about the 5-minute chart and the SPY because it doesn't matter. Your 3-month view shows us here, we just put a new 52-week low in here about 10 minutes ago. And you can see another push down, and we're on the new lows here. And this market is slowly trying to grind its way lower. Volume today is not all that special at 84 million shares. We're almost to the 200-day on the weekly chart on the SPY. Why is this important? Well, because that's as important as the 200-day at 358.18 here. We'll see if we want to hold there or not. We've been basically trading in a nasty range for the last couple sessions with a little break to the downside, a little break to the upside, but overall between 362 and 370 as this market consolidated. We had this unbelievable oversold signal coming into this week. We were negative 468 here on the NASDAQ. We were negative 435 on the New York Stock Exchange, and we couldn't muster a bounce. Even today, I want you to see here, the oscillators are bouncing with this action. So this to me is worrisome. It means this market just has no strength. We have not been able to even get back to the 8 days since the last time we touched it. And that was on the 21st of September. Before that, all the way up here on the 13th of September. So we have a very, very weak market here, and that just keeps pushing down. What's going on? We got a couple of things going on. Most importantly is the Fed has been talking all week ad nauseum, and they are all hawkish. None of them are talking about data dependent. They're hawkish as beyond belief. And this is kind of affecting the market. What else we have going on here is we have this war that's going on on the dollar, right? And this is important to take a lot of note. We've been talking about the dollar for a while in the room. But the dollar here finally cooled off the last couple of days after the Bank of England stepped in and they did quantitative easing. Basically, they say no, it's not, but it really was, as they were buying up long-term bonds. Japan has stepped in. There's a lot of speculation that China's about to step in also. Everybody's trying to stabilize their currency against the dollar. The problem is our Fed is just not paying attention. The ECB is generally not paying attention either. They seem to be saying the only way they're going to beat inflation is to keep raising rates. With that said, we had data this week that just was not helpful. GDP was minus 0.6% on the revision. And today we had the PCE number, which is a Fed favorite that was supposed to be a show slowing inflation, instead of showed inflation accelerating. Not easy environment, guys. And I mean it. It's just not an easy environment as we go into here. We have a lot of data to worry about next week. It's the big jobs week. We all know that. We also have, right, PPI manufacturing final, ISM manufacturing on Monday, right? Factory orders in there. Then your big one here is non-farm payroll on Friday. So we're going to have a lot of data to go over next week, and the market will be absorbing that as we go here. What else is going on is this market's just kind of broken. Bonds just rolled over. They were trying to push up. We couldn't hold the 8-day. We come back here on the lows. The VIX, we usually have a buy signal when it's inside the Bollinger Band. We got that on Wednesday. Thursday, it stayed inside of it. Today, it's still inside of it, yet the market's not rallying. This is a problem. It's concerning. What's going to drive this market higher? We're coming up on earnings soon, and not in the big time, and not that far off. And then you have to look at the stocks, and this is where it gets ugly, and we're going to open it up to 1 year here and just say, something's got to change to lead us higher. And and I mean it, we need a change in anything to get a bounce. AMD, new 52-week lows yesterday, a little inside candle here today. NVIDIA chart, same thing. New 52-week low yesterday, a little inside candle here, ugly charts. Apple, which had been one of the stronger names, just getting decimated, has breached 140 here now. Ugly, ugly candles there. Tesla almost always rallies into their AI today. Yep, it's actually green today, but it's not doing much. Google's been destroyed. It's at a 52-week plus low. Meta, my God, the carnage there. The banks are selling off. We have a new 52-week low yesterday on JP Morgan. And, you're looking for some leadership in this market, and we just can't find it. And until we find it, this market will stay problematic, and it needs something to lead us out of this. And, while we were talking about peace with Ukraine and Russia as a possibility to get this market to bounce, after Russia's moved in the last couple of days to annex Ukraine, those four provinces in Ukraine, that's not going to happen. That's just game over there. So, we're 2 weeks away from earnings season starting, which is probably going to be a very difficult earnings season with the rate the dollar's going. So we remain tactical. At some point, we get a flush. At some point, my gut says this market will finally say, I'm not going to go down slowly. I'm going to give it up, and we'll get a big time flush in this market. But we haven't gotten it yet. All we know at this point is 479.98 was the high of the year on the first trading day of the year. And as of today, new low at 358.85. And we're starting to get to that point where you start looking for another one of these nice little bounces here in the market. Maybe we get it next week. Inflows on Monday morning. Maybe the Fed won't be so talkative next week. Everybody have a great week. And I'm going to charge tomorrow because Sunday I plan on being out of pocket.